Hello viewers, in this video I'll be going over gold miners, ETF ticker symbol GDX. Today we are up 26 basis points on the 1 hour chart. We are seeing a convergence on the 1 hour MACD, however it's still negative, but we may see further a possible divergence shaping. On the 4 hour chart we start to dip into the negative, and right now we are using the 150 moving average as support at the moment, and if we expand out to the daily chart we start to slightly dip into the positive MACD. However, we start to see a divergence as well. So at the moment we are encountering resistance on the 50-day moving average and the 100-day moving average. So I do see we need to break above the 100-day moving average first, and then we proceed on higher. At the moment we are filling up the gap left in December 2nd and December 3rd. So as we fill in the gap and we average above or make higher lows, we may see higher prices in near term future. So at the moment I do see a possible resistance at the 100-day moving average, which is around the price of $27.85. And as indicated back in December 3rd, and between December 3rd and December 5th, we failed to break it last week. So this week we may have a chance to break it. So as for resistance, or support I should say, the possible support I see in the past, as indicated, we have a price concentration around $26.30. It was supported for many times. That did back to August 1st, even slightly to September 3rd, October 1st, and October 16th, November 11th, and November 26th. So more than 4 times we found support on that. And the 150-day moving average also coincides with that price level. So I do see that as a real good support. And since if we're moving higher, that price movement is roughly around 2.9% or very close to 3% to the upside, and to hit the support it is around 3% as well to the downside. So the forecast model is now available in the link below, so do check it out for gold miners. And if you configure the settings, you'll get the results of the models that I do not go over with in the video below, or in the video. So back to the forecast model, I'll go day by day where gold miners will head to the next coming days. So we have 1 day out, 2 days out, 3 days out, 4 days out, 5 days out, 6 days out, and 7 days out. So which one of these models we should focus on? Ideally the model that is the best match to the current trend. Right here we have the current trend, and below is the trend that I believe is the best match. This trend dates back to, I would say, May 15th to August 9th, 2017. So let me point out why these two charts are similar. So what we have in the current trend, we start off touching the bottom Bollinger Band. And after touching the bottom Bollinger Band, we see a reversion to the mean, slightly above the middle Bollinger Band, right at this instance. And then we see sideways price action for several weeks. And right towards the end, we see it touch the upper Bollinger Band at this very last instance, and then we see it fall into support at the middle Bollinger Band right towards the end. We start to see a similar pattern on here as well. We start off at the bottom Bollinger Band, and then we proceed to revert back to the mean, slightly above the middle Bollinger Band and slightly touching the upper Bollinger Band as well, and at the trend in question. And then we see sideways price action as well. And then right towards the end, we see it touch the upper Bollinger Band. And after touching the upper Bollinger Band, we see a slight dip and revert back to the mean. So we see those price action, and there is reason to believe that the trends and patterns are the same. The outcome and forecast should be fairly the same. So we have is 1, 2, 3, 4 points, and 1, 2, 3, 4 points. So let's check the model or forecast for this trend. And back then, gold miners was up around, if we look back to May 15th, to August 9th, 2017 for gold miners. Gold miners was up around 1.4%. So we may see possible upside to gold miners. And if we check the probability for day-by-day probability, we do see that in beginning stages or early days or tomorrow, we see slightly neutral. And however, if you expand further out, we start to see a higher chance, especially at this point right here on 4 days out, there's a higher chance we'll reach between 3 to 7% higher from where we are currently at. Overall, it is favoring to the upside if you look further into the day-by-day probability. And this is how I found the trend, or the trend in question, compared to the current trend. And so again, this forecast model is now available in the link below, so to check it out. If you enjoyed this content, feel free to like, comment, subscribe, and thank you for watching.